For more on the new inflation data that we just got and its impact on the Fed's thinking, let's bring in former Dallas Fed President Richard Fisher. He's a senior advisor to Barclays, serves on the board of Tenet Healthcare and Warner Brothers Discovery, and as a CNBC, most importantly, and as a CNBC contributor. Does that go ahead of the Dallas Fed stuff at this point? Probably. But equal billing right at the top, right?
CNBC definitely at the top.
We haven't talked in a while, Richard. What do you, everything that the Fed has done and said, do you have a problem with any of it at this point? How are they doing? What kind of grade?
I think they're doing well. They made a mistake. We've talked about this before, Joe. That is embracing this transitory argument, which is silly. The horse is out of the barn argument that I call it. Having to corral inflation now, bring it back. It's way out in the pasture. They've been bringing it back in. I think they moved quickly, but very importantly, in terms of evaluating how they're doing, they've been telegraphing everything. We already know that at this coming meeting, it would be a quarter point. It's already been leaked out to Nick Tamaris at the Wall Street Journal. He's the Fed whisperer. And we're hearing the different bank presidents and governors speak the same tune. So I give them credit for being transparent, not hoodwinking the market. And I think we're likely to have, obviously, another quarter point increase.
Yeah,
the question is what happens after that and how they react.
Given the economy and the numbers that we're seeing, and we get mixed things. Sometimes the economy looks pretty good. Other times it looks like there are some cracks. Do you think they need to go as high as they said? Can they do it with words still? If they say 5 1/4, can they just say it and they don't actually have to get there?
Well, Ben Bernanke used to say words are as powerful as policy itself. I think he's right. We'll see what they say after this meeting at the end of the month. And I would assume they'll still be determined. Powell will be determined to be forceful because he doesn't want to have 2 errors in a row, I would guess. The second error would be stopping early, having inflation continue on, not coming back towards the 2% target. Now, the numbers we just got today, Joe, I like to say that instant analysis is an oxymoron. It's too early to really, I need to spend some time, as did Steve Leisman, who mentioned time to look at the data. But the market reaction has been bland, and we'll just have to see what they can sort of deduce by studying the entrails of these numbers, and I'm sure they're hard at it as we speak.
Do you think that the 2-year and the 10-year will get in line finally with what the Fed is saying, or do you think the Fed comes down to where the 2 and the 10-year? There's some weird disconnect there, Richard. How do you explain it?
Well, I mean, we've had this inversion for quite some time, Joe, and everybody's been saying this is a harbinger of a recession. The 10-year has come down from a high of, 430, has been down and then back up. It's bopping around the 3.5 level. The 2 years held fairly steady, although it's come off as well from almost 4.7.
It's nowhere near 5%, Richard. I mean, it doesn't.
I agree.
And 3.5 on the 10-year. That's not where it should be if the Fed is really going to do what it says it's going to do. Somebody's lying. Either the market's lying or the Fed is lying.
Well, I don't think the market lies, and I don't think the Fed lies. And I think, look at the demand for treasuries, Joe. Central banks have been, particularly the Chinese, the Japanese, have been reducing their holdings. But through the Cayman Islands and the UK banks, we're seeing a lot of private money, probably hedge fund money and other money, flowing into the 10-year, flowing into the 1-year, flowing into the 2-year and the 5-year notes. So I'm not surprised to see where these levels are trading. And I don't think they're telling us as much as economists impute into this inversion.